Over the past 2 decades, wealth accumulation has been markedly influenced by growth ETFs, with standouts like QQQ consistently outperforming the S&P 500 in 9 out of the last 10 years. Particularly for individuals in their early years, investing in growth ETFs presents a more compelling option than allocating funds to dividend stocks. The recent 2 to 3 decades have been dominated by technological advancements, and with emerging trends like digital currencies and generative AI, evident in innovations like ChatGPT, the forthcoming decades are poised to be driven by technology-driven growth. With this overarching theme in mind, today's discourse centers on 2 preferred growth ETFs, SMH and QQQ. The VanEck Semiconductor ETF, SMH, has delivered an impressive annualized growth rate of 24% over the past decade. This figure stands almost double the 12.21% 10-year return of the S&P 500. Concentrating on companies engaged in semiconductor production and equipment, SMH boasts prominent holdings including NVIDIA, Taiwan Semiconductor Manufacturing Co., Broadcom, ASML Holdings, and Lam Research Group. These entities are stalwarts within the semiconductor industry and pivotal players in the recent AI-driven market surge. Despite trading at elevated P/E ratios, our conviction remains steadfast that the present moment is opportune for continued investment in the SMH ETF, employing a dollar cost averaging strategy. While the expense ratio is comparatively higher at 0.35% vis-a-vis other index-based ETFs, the growth and performance offsets this cost. Transitioning to our second featured ETF, we encounter the innovation ETF QQQ. Our strategy entails veering away from the quest for novel ETFs with scant historical performance records. Instead, we embrace the simplicity of backing an entity that has substantiated its value over more than a decade. QQQ mirrors the Nasdaq 100 index, encompassing trailblazing technology stocks at the forefront of innovation. An impressive annualized 18% return has been generated by this fund. Unlike its counterparts such as SPY and VGT, QQQ avoids excessive concentration, distributing its holdings more equitably. Chief constituents encompass Microsoft, Apple, NVIDIA, Amazon, and Tesla, collectively comprising 43% of the portfolio. That wraps up our growth ETFs. Remember, before making any investment decisions, it's always a good idea to do your own research and consider your financial goals. Thanks for tuning in, and we'll catch you in the next video.